question that I'm asking myself is, are we breaking trend? Now, the example that I want to share with you, if we look at the setups that I shared with you guys, if you start drawing lines like this, you can easily set a narrative to say to yourself, okay, we're holding, or are we breaking trend? You know, these kind of things. And if we then take that same approach to what Bitcoin is doing right now, the question that I think that a lot of traders are we breaking trend, or are we just doing exactly that? We just basically building another sideways channel. So I want to answer that with you guys. I want to basically unpack this trade with you to see where we are within this swing setup, and then obviously have a look at that in relation to Ethereum, which is now pushing $2,700, and Solana that is not reciprocating the boost, just to make sure that we're on the right side of the market and the market trends. Okay, so if you find this interesting, you think that that's something you would like to see, what you need to do is just give me a like, give me a subscribe. Let the algorithm know that's good for you. And let's say hi. Hello, morning Liam. I see you've got questions locked and loaded. Morning Renee and everybody else joining in. Drop me a comment. I'd like to see where you guys are at. Did you and are you in the long with me? I think that's a fair question. Let me know in the comments. Okay. Now, if we then look at this price action from a 4-hour point of view, what I want to do is simply just layer out the demand and the supply zones for you guys, and then we'll take it from there. So what I'm going to do is just going to hide the current. I can leave the current long. I'm just going to hide all the other setups that I've shared, and then I want to just remind you of a nifty tool. When you draw trend lines, it's easy to draw a trend line like this. It's easy to draw a trend line like that, and it's a fluid, basically. It's a thing that you can just move around, and it's all based on your bias and your opinions for the morning. It's simple to draw a trend line like this and say, well, there you go. This was a breakout, and now we've fallen back. So if that is the case, the market doesn't want to be bullish, and maybe we need to move back down to the last time we had lows. There's so many easy ways that one can use these trend lines to sell somebody on a narrative. That's not what I want to try and do. So the tool that I use to just keep up to speed of whether we're in a trend or not is the Fib speed resistance fan. So it's basically a Gann tool. So I snap it to the bottom of the trend and I put it at the highest point. Now, for everybody on the stream, your highest and my highest point might differ slightly based on the exchange. But the key here with this is just to make sure that you do have this settings. Pause the screen, make sure you've got yours as mine. And the only real value we're looking for is the 38.2. Now, if we track this as price goes, once you have your first divergence, meaning the RSI has now moved from oversold to overbought, that is when you know that there has been a wave. Now, Elliott wave basically explained that is that first one, and now you're trying to stay within the greater move. This means that going forward now, every time price puts in a new high, let's maybe use the line tool just to simplify this or visually make this more accessible. Every time we put in a new high, you'll see that the Gann fan is basically just moving the goalpost of what is a trend being broken. Okay. The same happened when we looked at this from a bearish point of view. So you have your initial wave where the RSI went from overbought to oversold. Okay. And then you put your Gann fan on there. And once you have that initial overbought, oversold, you can then track price on the highs and you'll see it will keep on moving the goalpost. Now, the tricky thing with scenarios like this is why you don't just use a trend line when trading, because if I just use the trend line by own definition, none of these shorts would be actionable shorts purely because, we have broke the bearish trend. And that brings me to the second part of the analysis. So although trend is intact, we also need to look at momentum. Now, the easiest way to identify if momentum is entering, because we're looking for a a continuation, we're already in a position, is to see if we can find hidden bullish divergence. This shows itself in the following way. The market will, any impulsive move, when there's a 5-wave structure, will have at these lows scenarios where, if I now have to visually draw the RSI for you at the bottom here, we'll have scenarios where the RSI will go up and create, divergence to signal a top, come down, create a divergence to signal a bottom, and then we'll have wave on wave divergence, where we're going to look at these bottoms in relation to these bottoms. And typically what you will find is your RSI on your last little hurrah for any impulsive move will have hidden bullish divergence. Okay, you're only allowed to use hidden bullish divergence if there is an uptrend. Okay, only allowed to use hidden bearish divergence if there is a downtrend. And subsequently, that's how we got to these entries in, because the fact that there was hidden bearish divergence, the market showed us that it's a shakeout, a trap, and then you should add and trade onto that. Okay, so where we're at now, the big question is, for myself, and I think that anybody that entered, say maybe on the entry zone at around 108, is this long still good? Because are we going to go lower and so forth? So what do we need to do? We need to look for hidden bullish divergence. I'm looking for a reason to see whether this is going to continue. Okay, now bring in the RSI real quick. What am I looking to see? If we identify this as a first completed wave structure, and we look at this as the beginnings of a second wave structure, we want to compare these lows with these lows in order to have 1, 2, 3, 4, 5. And the hidden bullish divergence that I'm picking up on these two lows is what tells me we golden. Okay. And the funny thing is, when we entered the market, when I gave the entry zone there, the RSI had not made that, and it was and the buy setup was factoring in that, and the idea that there's an anticipation that there should be a bounce into this area, into the demand zone. I give you guys a wide berth, wide entry zone for the continuation on further. Okay, so what do we have from a trending point of view? If I were to say our trend, that is still up. From a momentum point of view, what do we have? Our momentum then is still intact. We have bullish, hidden bullish divergence momentum. Then the last part of when we look at a setup, that's our structure. Therein lies our invalidation. When do we define the areas for trend break, momentum break, and what kind of setup do we use? Because the structure defines whether I want to use hidden bullish divergence to enter, or whether I want to use strong bullish divergence to call a bottom, or whether I want to use hidden bearish divergence to add on to a short or something like that. So the structure is the last part. And that also sets your expectations. So if we look at the structure from this point, the expectation of this entry is that there should be still a 5-wave structure leading, or 5-wave Elliott wave, 5-sec Elliott wave, leading out of this buy. And if you've missed the bus, now is still a good time to enter, because we're still very close to, or still in our buy zone. And if you're not confident, never should trade with confidence or fear. But if you have a situation where I've been taking a couple of losses, maybe I want to find out first. The real leverage gains are normally to be made when we go from wave 2 to 3, because that's typically the biggest move. And at that stage, what we will have done is made a higher high and deleted any signs of a potential hidden bearish divergence, because within this wave, we're trending down. So I don't want to see the market kind of fight resistance zones with my long and the RSI being higher already, because that would typically be bad. That would mean that I've got this wrong, and this is only the beginnings of a deeper retrace and a reset, and then we're going to try again. Okay, that's the cautionary tale for that. And that means that if you wait and to find whether this analysis is right, your second entry would probably be the one where you can load up a little bit more and take a little bit more risk, because at that stage you have more confluence pointing to the fact that this is still the potential outcome for the trade. Now, if this makes sense or was helpful, let me know in the comment section below. I'd love to hear your feedback.